Hello and welcome to Commodities Corner here on Dukascopy TV. So what's the story on China and iron ore? Are we expecting a soft or a hard landing? And what could the implications be for trading commodities? Well, joining me on the line is Alistair McCaig, market analyst at IG in London. Alistair, an article today in the Wall Street Journal said that Beijing is asking steelmakers to buy more ore from abroad because many of them are losing interest in doing so. Why do you think this is, and what sort of effect could this have on China's overall economic well-being?
I guess part of the reason for this, the fact that China has been well renowned for storing deposits and having backup supplies to try and ensure a smoother ability of stock to its national companies and manufacturers. And I guess they have felt the need to expand this out with and arguably maybe help to prop up some of the more global prices in the global market.
We know China is supposed to be improving emissions in its cities via the use of high-grade iron ore in steel-making mills, and this will benefit some of the big mining companies, I'm sure. But it does mean it will be harder to move away from relying on countries like China and Brazil for imports like iron ore, doesn't it?
It does. It means that they're going to probably have to pay more of a premium on the price of their iron ore suppliers, and that will have a knock-on effect. And I think to an extent, we're maybe seeing some of this being factored in already. You just need to look, glancing around at the last few sets of manufacturing figures coming out of China, specifically HSBC's figures. And this morning we've seen once again, not only is it still in contraction, but it has delved further into contraction. And I guess that's the first time we've seen that for the Chinese manufacturers in the last 6 months. And I think it probably brings on maybe fears that we might be delving back into that sort of turbulent 2012 period where Chinese manufacturing really did struggle.
Okay, but isn't this all just an overreaction, and that actually China will end up experiencing a soft landing regardless, and it won't really affect commodities in the long term at all?
No, I'm not sure I quite go with that. I think we've also seen that the growth in China more generically has stayed well below that 10% and at 9.7%. Although a very healthy level in many countries' regards, I think for China it is showing that things are still continuing to cool. And I think if we maybe take a step back and look at a broader picture, I think we can see that there's some real fears, not necessarily internally for China, but for many of the other emerging markets out that China does a substantial amount of business with and partnerships with. And we've seen not just the emerging markets as far as their equity indices concerned, which this year alone have fallen by about 6.7%, but we've seen their currencies come under some real pressure as well. And I think this does paint a picture where there's some real fears that many of these emerging markets are going to struggle, certainly in the next 6 months and possibly even further down the road.
So what are your projections going forward then, Alistair? I mean, surely this will affect the price of ore in the short term, which is being put in the spotlight perhaps more than ever before.
That's true, but we have seen different commodity miners tailor their production for the previous year in 2013 to demand more directly, to be honest. And I think it wouldn't be too surprising to see the sort of lagging timeline between cooling manufacturing demand maybe and a tightening of the supply side to the market. Miners have shown themselves to be pretty adept at curtailing production pretty swiftly if profit margins diminish too much. And I think with that in mind's eye, I wouldn't see, even with maybe the underlying demand struggling from time to time, I think manufacturers, or miners rather, will be quick to react to this. And I think that should hopefully ensure that we shouldn't see too aggressive sell-offs over the course of 2014.
Okay, that's all from Commodities Corner this week. Don't forget to check out our interview on Chinese manufacturing today before the country starts its New Year holiday next week. I'll be back next Tuesday, but for now, goodbye.